Our next guest is another well-known name in the industry, Peter Grandich of Peter Grandich Company. Welcome back, Peter. It's been a long time. You don't do a lot of interviews. It's always an honor to have you back.
Well, it's a quite honor, and the main reason I do this is because it's Kitco.
Thank you very much for your kind words. Peter, you've been a big fan of gold for a long time, and offline you were telling me that 2 years ago you sold everything and bought gold. Tell me why you made that decision 2 years ago when gold was still nowhere near its all-time highs.
So you're right, it's just about 2 years ago to the day with gold trading on either side at 1200 that I decided to move out of the general equity market, including my bond holdings, and put all of it but one equity, general equity, into gold and gold-related investments, whether they were ETFs and mining shares and physical bullion. And I haven't looked back since. I've maintained that all the way to today that we speak.
At the time, what was the main rationale behind your decision? Did you see potential risks in equities? Did you see volatility in the markets that you needed to be protected from? Did you see a lot of geopolitical tensions rising? What were the macro factors behind your decision, Peter?
Well, starting at home, it was considered a very irrational move, and throughout my clientele as well. The thought of moving out of general equities, which at that time still had not come close to even like where the NASDAQ is now, there was a broad feeling that the market would continue going higher, interest rates would drop, and people were basically across the board calling gold relic and a lot of worse things. It was more of a contrarian view than anything else. I had not been in gold for a few years up until that. And yet when I looked at it, known its history, understood or felt what was happening economically, politically, and socially, it seemed to be much more undervalued than the general equity market. So it wasn't a gold bug kind of thought that did it. It was really valuations, apples to oranges.
Yeah.
And of course, through most of this rise, it's been that. Now, of course, it's taken greater importance because of some of the things that are happening that weren't happening 2 years ago.
When you talk about valuations for gold, what were the valuation metrics that you were basing your decision on? Were you looking at the Dow to gold ratio? Were you looking at gold relative to gold stocks? Were you looking at gold relative to historical averages? How did you value gold in your mind?
Well, I've been at this 36 years. I've never been a person that used the general guidelines. I've always been somewhat called a maverick or what have you. To me, it was more of a pure contrarian plane. Everywhere I looked, the former gold bugging society had been broken up. The hard asset group had moved into cryptocurrencies and marijuana stocks, mostly across the board in what we call mainstream Wall Street. I call them the don't worry, be happy crowd. They treat gold like kryptonite as to Superman. So there was really, because there was no real interest, and even the people that used to have a big interest had moved away. To me, I would say the number one reason at that point in time was, as a contrarian, it was just screaming buy. It was just really, other than the people that always promote gold, there's still a few, they've been around 30 years. If they live another 30 years, they'll still be promoting it. But there really was nobody else seemingly wanting to own it, and that's what really caught my eye more than anything else.
So why 100% allocation to gold? Have you considered other safe haven assets like treasury bonds, Swiss francs, U.S. dollars? How did you make the decision to buy, put all your money into one basket?
So that would be what I would set aside for my portfolio. I owned real estate separately.
Okay.
I never used treasury bonds, which are pure safety reasons, as a general portfolio. It was really just not being in general equity stocks. Up until that point, I had the typical portfolio. It was based, technology stocks, things of that nature. But at that time, it just seemed that, and it might have been because I spent 25 years working within the metals and mining industry, and everything that I used to believe that needed to happen at a major bottom seemed to have occurred. Most people have left. Most people don't consider it. It was widespread. You couldn't pick up a media report within 2 days and not read somebody panning gold and telling how it was going to go under 1,000 and all. So whether it was gold or copper or cocoa, just the fact of how everybody was looking at it really made me feel, and I felt I had to be aggressive. and I didn't think there was a lot of downside risk. You know, I learned a lot of things in 36 years, and one of the things I learned is it's not how much you don't make, it's how much you prevent losing. And at that point, I thought there was a lot more risk to the stock market going further down than gold going much below 1,200.
Okay, that's a very good point, Peter. Now, you've certainly made the right call, as history would prove you right. How do you feel about today's prices? We've just seen gold breach all-time highs earlier this week. How do you feel?
Well, as you know, back then I spoke even then that I felt by the year 2021, if not sooner, we would make an all-time nominal new high, which we did. I believe things changed dramatically for the positive for gold in May, and I've used it on my blog and when I still tweet, and that is what Jay Powell said in the infamous, what I think will go down in history as on 60 Minutes. When basically within 30 seconds, he basically told the interviewer, yeah, we just print money, and we're going to keep printing money. And his comments a few days ago that he's throwing everything in the kitchen sink in order to preserve the capital markets. There are gold bugs that I used to know that passed on are probably standing up in their graves going, I can't believe it's finally happening. I'm not there to enjoy it. These are dream scenarios. It's like a perfect storm to come together from all the things we used to talk about for years that never happened. Monetary concerns, political concerns, social unrest, all those things that used to be selling points by the hard asset crowd but never materialized have all come together now at this point. So for me now, it's no longer a valuation. It's really an alternative and a protection.
Yeah.
And it is something that simply is for capital appreciation.
Peter, if your portfolio was the same as it was 2 years ago, meaning if it was all equities today, would you still make the same decision today as you did 2 years ago to allocate all your assets into gold and away from equities, given today's situation?
That's a very good point, and I'm going to tell you what. That's why I wanted to do the interview with you, because I find you very, very sharp. Because one of the things I can tell people in 36 years is people always say, "Oh, your financial advisors always tell us when to buy, but you never tell us when to sell." Well, one of the first reasons you should consider selling is if you can't first buy what you have today at today's level. And to answer your question is, I don't think I would do it as aggressively. In fact, my personal plan is, as we appreciate after what should be at least a consolidation, if not a fairly sharp correction for gold in the short term, but as we get into the 2000 and something, it's my plan to personally weed out some of my holdings and some of the gold. So the answer to your question is, no, I wouldn't be as aggressive, but I would still want to be more out of the stock market today than I was 2 years ago.
I was speaking to an analyst a couple of weeks ago who told me the story, actually, that Robinhood has seen a surge in activity from their users trading gold-backed ETFs. And Robinhood, as you know, is a trading brokerage, online trading brokerage that has a primary user base of millennials. So a lot of younger people are starting to show interest in the gold sector where previously they hadn't before. And how does this change the landscape for the for gold investments at large?
Well, for me, contrarian by nature, you get concerned when you go from basically the only person in the boat to all these young kids piling into the boat.
Yeah.
But that is always what normally happens at the latter stage, or what tends to be the most explosive stage of bull markets. And that we're only starting to see. So that's why I don't believe, as much as people go, oh, if those kids are in, I'm getting out, is some of the things I heard from older investors. No, this is just the start of the explosive stage. So I think there's a lot more upside to it. But I think so much of it, and all the markets, are going to have a direct impact from what happens in the U.S. election. There's such a diverse, different scenarios that can take place on something that's only going to happen a few months from now. Mm-hmm. And when I look at all the potential scenarios, all of them are positive for gold. I can't say the same for equities and bonds. So gold, like I said, to me, remains in a perfect storm scenario, something that many of us thought for years could occur, and it's finally happened. It's certainly in the twilight of my career.
What did you mean when you say that not all scenarios are positive for equities and bonds? Like what are some negative scenarios for those assets?
Well, my advice to my clients of late is that by Labor Day, we need to have a strong scenario of what can happen after Election Day and how that may impact our portfolios, our investments, our life, etc. One of the things that's missed in all of this is while the Federal Reserve has managed to print trillions of dollars that your generation and others will pay for more dearly than I will, that has helped forestall the realities of economic problems on a national level. But in our state and local level, they don't have printing machines. And all of them have had to spend all sorts of money and borrow money they don't have. So not many of them are going to talk about the cost of that until after Election Day. But when that comes, people are going to realize that states and cities across the board, forgetting social and political issues for a moment, just general services are going to be cut dramatically and taxes are going to have to be raised dramatically. And the likelihood if the Democrats take control of the presidency and or the Senate, there'll be a far ramper up on taxes. For instance, one of the areas, even in the state that I live in, New Jersey, which had removed an estate tax, we're going to see that again in a hard way. We just had to borrow over $10 billion just to keep the state going. So there are a lot of economic issues that aren't yet in the forefront because you basically had a drug pusher named Jay Powell provide the addicts, the people that are still hot on the stock market, with more drugs. So the party goes on. And they believe it can't end because he'll always give them something else to keep the party going. But that's coming to an end, and it's certainly, in my view, shortly after the election will be over no matter who wins. And then that's where I see some very serious problems going forward for the stock market and what's left of the fixed income market. Mm-hmm. One of the things the Federal Reserve has done is not only destroyed the fixed income market, but it's actually terminally illed the retirement planning market, because how do financial advisors make plans for people for retirement when there are no more interest rates to make them on? We're really forcing people to have to speculate more and more to secure or hope for retirement. So there's a lot of things that we can spend a lot more time than I know you have. The troubles of that, they probably won't occur until after the election, but after it, they're all going to come out. We're going to pay a dear price for it.
Peter, what are the next key levels for gold that you're looking for?
Well, once you made a new all-time high, I don't know how. I know there's guys out there. I used to be a bit of a Gann angle person. Very few people use them. I mean, the numbers, David, the thing that I find most interesting about this time, I used to appear at a lot of shows and guys would talk about 5,000, 10,000. And finally, I couldn't laugh. I was the MC, but I would turn my head and laugh because not only was it kind of silly to talk that, but the conditions that would have to exist to get us there. Well, you know something? A lot of those conditions now exist. So the guys and gals that do speak about $3,000, $4,000, $5,000 gold, it is a realm of possibility. For me, I think there's still, $300, $400, $500 in the next 12 months. But if we do get to 4,000 or 5,000 in 12 or 24 months, I can tell you my scenario about the economy, socially and politically, must occur, because that's the only way gold's going to trade at $4,000 or $5,000 an ounce.
Wait a minute, you just made a key point here. Before, you didn't think that these $5,000 gold price predictions were sensible because of the conditions before, but now they make sense. What changed in the economy, Peter?
Well, it's not just economy. For starters, we now talk in trillions. We don't even use billions anymore. That debt. It's a race to the bottom for currencies. All current major currencies are being debased. Politically, listen, there is no more middle, at least here in the United States. I don't follow Canadian politics, but there is no more middle. You're either basically to the left or to the right. And right now there's 50% or more people that wish and would see the whole country implode if it meant that the guy that's currently president isn't president again. And so all these things come with a price tag. There's prices to pay. So socially, you see it every night on the news. Politically, we just touched on, and economically, we have to spend trillions of dollars of new money just to keep things afloat. So these are all scenarios that weren't realistic 5, 10, 20 years ago, but are now before our eyes. So for the first time ever, the gold bugs of the world, or the guys that always talked about crazy numbers, have a legitimacy to stand and talk about those numbers.
Peter, you said offline that this would be your farewell address to the media. This would be your last media appearance. Well, I speak on behalf of all media. I think that we're very sad to see that happen. And I'd like to just recap what you've learned over your decades of experience here. In your 25 years of service in the financial industry, what were the key lessons you've learned?
Well, it was 25 in the metals, 36 years altogether. After you've made and lost millions not once or twice, the reason my book is now called The Former Wall Street Whiz Kid versus The Wall Street Whiz Kid is no one knows the future but Almighty God. One of the things I can tell you, and I know you have some great guests on and they're worthy to listen to, but what I learned after looking in a crystal ball for a few decades is all I became was an expert on how to eat a lot of broken glass. So the first most important thing is not to think that you know what the future's going to be. The markets don't do what you think they should do all the time. That was the first hard lesson. The second lesson we kind of touched on is, when do you buy and sell? And again, I think a primary reason is you begin to think of selling if you couldn't first buy it now. But I think one of the things, if you had to put something on my cemetery plot, it would say the ultimate crime in investing is not being wrong, done that, it's staying wrong. And that's the hardest thing to do when usually ego and pride and other reasons get involved and keep the position that really you shouldn't be in. And there's a whole host of other things, but I think those are the primary things that I would be concerned about. And let me just add, Daniela, who I presume will be back, and Kitco. Kitco's been the only gold source that I've used from day one and continue to use today. And quite honestly, David, that's the reason I felt I didn't mind doing an interview. But I'm basically done in the secular world doing media interviews. But I will continue working in my Catholic Christian faith and spend time with that. But there was no better place for me to go out on than on Kitco.
Peter, those are really kind words. I really do appreciate you supporting Kitco and educating our viewers with your views. Peter, you've lived through and worked through many great economic and political events. You've seen inflation in the 80s. You worked through the crash of 87. You saw the tech bubble of 2001. You worked through 2008, 2009, and now 2020. I mean, these things sort of see a pattern. These black swan events that people talk about that should really occur once in a million years seem to occur once a decade. So, how should you as an investor, what are some parting words of advice you leave for investors who should be prepared for the next black swan event?
Well, to be fair, and I don't take this personally because of your age, but right now in the U.S., 2/3 of the financial advisors have only been practicing since the new millennium started, and almost 1/3 have only since the last financial crisis started. So one of the concerns I have right now is there's not a lot of experience from, well, as you just stated, what I've gone through, by people that are being responsible to give other people advice. One last thing, and if I can tie that to gold, I've heard for several years now, younger financial advisors, even in the place where I still run my insurance business through, talk about how great the stock market's been. And I point out to them that since 2000 began, gold has outperformed the stock market. And they look at me, what are you talking about? This is, a few $100 below where we are. And it's true. It was under $300 when January started the millennium. It's up 500 and something percent. Stock market's up between 150 to 200%, whether you use the NASDAQ. And if you take the dividends and reinvest it and add another 100, 150%, gold outperformed the stock market. And yet, if you ask most financial advisors, should I own gold? They'll tell you no. So one of the first things I would tell people is that I'm very concerned about the lack of true experience at a time, as you just painted, that things are becoming more volatile and troublesome with less and less time in between. And as you heard me say earlier, I really believe truly in my heart of hearts, there's one thing I hope I'm wrong, but I kind of feel I'm going to be right. And that is, it won't be long after Election Day, no matter who wins, that we are going to be in for a very long period of downturn economically. And of course, socially and politically will continue to be extremely volatile. So I would just tell people they have maybe a few more months, but at best, but after that, I think things are going to be very, very challenging. challenging for a very long time.
So the party is over for stocks. Is that what you're saying?
Well, when you have to have creations of trillions of dollars, and even after just the other day when he said he's going to throw the kitchen sink, and then a day later we're down 500 points, I think the market's starting to tell you is it's not getting, the drug is not getting as much bang for the dollars that it used to. And one of these days, the moment they don't think it works anymore, the bottom or a decline that we've never imagined could happen will take place.
Finally, Peter, offline, you're telling me that you are also ending your work with some professional athletes. Can you tell us a bit more about that?
Well, yes. 20 years ago, I started with a former New York Giant football running back, a financial advisory service for Christian athletes, and it grew, and we have a distinguished board. And in recent weeks, because of what's happening here in the U.S. socially and politically, I have been outspoken about my views on my blog, on my Twitter page. I shared that I will only kneel for God and country. I believe my Lord and Savior Jesus Christ came for us that all lives matter equally, so no one group should stand out before another. And I also stated that what professional sports was deciding to do in getting behind all the social aspects was a mistake. And the way I described it, and I'll just end this by telling you what I told one of the athletes that left me. We went out for lunch to discuss my views, and I pointed to him, the busboy, the waiter, and the cook. What if they came out here right now to start arguing with you why you're wrong in your views? And his opinion was, well, this is not the place I've come here to eat. And I said, there you go. We're at a leisure and entertainment industry. And guess what? You guys play in the leisure and entertainment industry. And people pay a lot of money to buy very expensive hot dogs and beers now to watch you play and get paid an exorbitant amount of money for a game that God blessed you with a talent that most will never have and people would do for a lot less. And they come there to get away from the very things that you're now bringing to the forefront. And that's my view. Athletes don't agree with it, so it was best that I move aside and not deal in that industry anymore.
All right. What's that jersey you're wearing now? You want to show the audience?
Let's see. You can see that because I want my friends in Vancouver to see that.
I don't think they'd be very happy to see that.
They were my homes away from home. I still love Canada very much. One of the greatest movies in the world that every Canadian American should watch is Canadian Bacon. Mm-hmm. It really shows how really no two countries are better allies in the whole world than Canada and the U.S. But I was known as the Antichrist of hockey in Vancouver because I would make fun of the fact that they still don't have a Stanley Cup, and we had 3, and none of us in New Jersey can name any of our players, and an 11-year-old in Vancouver can name every player and every statistic. So if my friends from Vancouver still see me, we still have 3, and you still have 0.
You know, I actually, it's good you brought that up because I grew up in Vancouver. We were close that one year. Remember, they played the Boston Bruins in their Stanley Cup final, but they lost. But we were close. They were close. Are you ever going to wear a Canucks jersey?
Well, I actually did. I wore it at the last conference that I spoke in Vancouver, even though I won the bet because the original bet was I would wear it if they lost. And that was my conciliatory. But I will tell you this, Canada, God bless you. You know, you put up with us at times because we can be really idiots, and it's just a wonderful place to visit. And if we can ever get past this pandemic, I hope the good Lord allows me to go back and see those beautiful towns before I pass.
Yeah. Well, Peter, on behalf of all our viewers, I want to thank you for your many years of service to the financial industry. And if you ever change your mind and want to do another interview, you know who to call.
Yes, and by all means, if I may also say, Daniela, peace be with you, and God bless your 2 children. May they have long and happy lives.
I'm sure she'd be happy to hear that message. Thank you very much, Peter, for your time today, and all the best.
God bless.
Thank you for watching Kitco News. We'll have much more for you. Stay tuned.